All right, welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream edition. In today's live stream, we'll be going over a market recap, break down the S&P 500, NASDAQ, IWO, which tracks the Russell's 2000 Growth ETF. We'll go through a quick look at the stocks that I'm holding, a watch list for the second half of the week, and then also any charts that you guys want to see as well. So if you have any chart requests, drop them in the comments. I have the comments right over here so I can see what you guys are chatting about. And we'll get to as many charts as we can because we want to be prepared for the second half of the week. All right, going to the charts here. And if someone could just let me know in the comments if you guys can hear me and everything is going well there, that would be appreciated. All right, taking a look at the NASDAQ, QQQs, right? So we had this nice, strong uptrend, started getting into trouble, when is that? Beginning of September 2nd through the 8th or so. Got a couple of these days where we opened high, closed low, opened high, closed low, and that was kind of the trend down to the 20-day moving average. We had that giant gap down, kind of a reactionary bounce there, and then we pushed lower. Once we got down here, we had our first rally attempt on this day, day one. The next day that got taken out. But then we did start a rally attempt 1 day, 2 days, 3 days. After the third day, we start looking for a follow-through day. If you guys don't know what a follow-through day is, I'll link a video up here for that. You guys can check that out. Basically, it's when an index such as the NASDAQ or S&P 500 is up 1% or more than the previous day and on more volume than the previous day. So that kind of marks the beginning of an uptrend after a market has been in a correction. So this was day 3, right? 1, 2, 3, day 3. After that, we start looking for our follow-through day. We don't get it on Friday. Friday, we opened high. It looked like we might get it if we pushed higher. Unfortunately, did not. Closed at that 8-day exponential moving average. Monday, it looked like we were pushing higher, and then the indexes closed down. A lot of the growth stocks also gave back some gains that day as well. So going into the close on Monday, I was getting a little bit bearish. And then today, kind of the same story for the index. We opened slightly higher and then pushed lower at the close. You can see this is reflecting the after hours as well, down another 1/3%. So indexes are showing, hey, we're heading back down. Maybe we do a double bottom here, but we're cutting through the main part of this volume shelf. So outside of the previous lows in the pullback, not much resistance until you get to the 342 range, this prior breakout area. And you also have a volume shelf there and the 200-day simple moving average for QQQ. All right, so that's the NASDAQ. S&P 500, similar story. Didn't get as hit as the growth stocks in the NASDAQ. Did have the same reactionary bounce. Looking for a day 4 follow through, haven't gotten that, and now we're back under the 8, the 20, and the 50-day simple moving averages. Definitely still a time to be cautious. The indexes are under all the moving averages, under the volume shelf, so that's never a great sign, right? And then want to check IWO. This is the Russell's 2000 Growth ETF, and this really paints the picture of how painful it has been being a breakout trader in 2021. Because we had 2 good months to kick it off. So from January 1st to February 13th or so, had a nice 20% move there. That was the time to really line your wallets. Lots of good trading, January, February. And then since then, it's just been a choppy trading environment, which is super frustrating. In a bear market, that's fine. We pull under the moving averages. No stocks are working. Then we just get out of the market. We don't worry about any of that until we get a follow-through day and leading stocks are taking off. This is the worst type of environment because every time you start putting on more exposure, the market turns around and then large sell-off, 13% sell-off, 10% sell-off, 7% sell-off in an index. So on individual stocks, you had 15, 20, anything like that. So really tough year being a breakout trader. Had to be very strict with your risk management. I've definitely learned a lot of lessons along the way. So Not the most profitable year, but definitely one to take away. I also wanted to check ARKK. This was actually up 1.3% today. I think actually, whoops, was IWO up as well? I think that was, yeah, so this kind of leads to my next point is the IWO is up 0.8% today. S&P 500 was down and NASDAQ was down. ARK is up 1.36. This is because we've seen a lot of the leading stocks actually break out today, push to new highs. We'll cover in a couple seconds here, but as bad as like the indexes are looking, market leaders aren't looking too bad. So as long as you're trading the leading few stocks, you're making some headway there, pushing your stops to even, taking new risk, you could play in this market. I am now 40% invested, but with very tight stops in a couple different names that we'll cover here. So again, if you guys can let me know in the chat, if you guys can hear me and all those things, just comment below. That would be helpful. First stock that I wanted to go over was AEHR. This is one of the 5 stocks that I do own. Right now I have AEHR, AFRM, SOFI, SOFI, OLN, and Upstart, UPST. So this is one that I was trying to find a way in today. If we look at the 10-day chart, actually let's go 5 minutes. We had this nice pullback. We consolidated in this range, and then this is me trying to get into a market leader because there's only a couple stocks that are working right now. So if I'm going to be putting money in, I want to be putting it into the largest or strongest stocks. And with AEHR, there was a few minutes where this tightened up. We broke out on good volume. That's when I got in my position. Tried to take a trade as it pulled back and cut that short really quick. All of my losses right now, or the last week or so when I started putting on trades, all of my losses on average have been only 2%. So keeping those losses very, very tight as I'm not convinced the market's in a good place, although the leaders are showing some strength. So, or sorry, I always get those messed up. AFRM was what I put on today. I already had AEHR as a stock. So zooming out here, we have this nice big cup nearing all-time highs. Let's see, have we got there yet? No, not just yet. Good volume. This was the first like stock that broke out after the downtrend. Had a nice move. I think this was this Tuesday that week? No, Thursday? Wednesday of last week. That was the first stock to go. I didn't take this trade, unfortunately, but then I caught the AEHR move the next day. But this is showing great strength, so something that I wanted to get in. So let's see if I can find my entry point here. On this chart, let me just go 1 minute, because that's what I was looking at. Is this going to mess it up for me? Yeah. Sorry about this. Where did I? All right, so we put in the low of the day, right at the open, pushed higher, pulled back, and then right through, where was it? I think it was this high. 140, yeah, 140.56. So right through this high, we pulled back again, kind of consolidated, and then pushed through on this green bar, heavier volume on that move. That's when I got in. I'm basically around even on the AFRM holding. Sorry, I should have wrote that down exactly where I got in. But this is a stock that's consolidating above the 8-day, the 20-day, 50-day, has tons of volume as it broke out here. And now we're looking for a break into all-time highs going into the week. So if this continues to be pushing higher, AFRM, market leader, then I'm getting a little bit more aggressive with the rest of the stocks. We saw Upstart, UPST breakout today. This was on the breakout watch list, something that I've traded a couple times during this uptrend and a couple times this week as well. So this had a 19% pullback, got out on this candle, looked to be continuing higher, reversed on Friday, right at the 20-day simple moving average, then consolidated day, and then today we finally broke out. I added to my position as it broke over the high of the previous day, 319. So right now, Upstart, AEHR, and AFRM are my 3 largest holdings. And this one is looking the best out of all of them. Already went through a little consolidation period. High tight flag setting up. So a stock that moves 90% or more in 8 weeks or less, this moved 225%, and then pulls back within 25% of the high. This pulled back 19%. So high tight flag, making a move. You like to see that with Upstart. All right, next, let's see. Let's go OLN. So this is a stock that I currently own, looking to add to the position if we get some follow through. I put this on the breakout watch list, so I don't want to spend too much time on it, but this is a beautiful VCP setup, volatility contraction pattern, where after a stock has already extended, this went from, let's see, 967 to 51, so 400% or whatever that is. Then we go through some pullbacks, tightening up, and then a possible breakout. So with this group strength rating, A, 29 out of 197. Within that group, it is the 4th strongest out of 46 stocks on a relative strength basis, and 6th strongest out of 46 on a composite basis. Last 2 quarters, earnings per share have both been up 396 and 386%. Sales have been accelerating now, went from -9, +19, +35, +79, and after-tax profit margin improving as well. Fund ownership on this stock has been increasing, 438 last September to 620 this September. So going to the chart to really break down that VCP. So let's do some measuring. Very strong breakout, yeah, 389%. From there, we had our first pullback, 22% from high to low. Second pullback from high to low, 15%. Third pullback from high to low, 9%. So each of these pullbacks are getting tighter and tighter. We're staying at the upper part of kind of this base here, so that's a good sign. Unfortunately, I took this trade yesterday, and then when everything was going south, I cut it down 1% or 2%, whatever. Rebought it today as we pushed over the previous day's high, so 50, 58. I bought at 50, 60. And then we squatted a little bit as well. 50.26 is where we're at right now. This is showing after hours, which is a very thin traded stock, so not going to be perfect there. But this is a stock that if we could get over yesterday's high, 51.30, I'll look to add onto it. It's just a beautiful pattern. Not going to be the fastest moving name, but something that is really checking a lot of the boxes for pattern setup. OLN. Next we have AMD. This is a tricky one because it's under its 50-day simple moving average right now. It's got great group strength, A+ rating, 9 out of 197 groups. Within the group, it's the strongest on a composite rating out of 29 stocks, but it's middle of the road in relative strength just because after it did peak, we've gone through some consolidation, which if you look back at its last breakout through here, we consolidated for a while. So AMD, it seems like it's one of those stocks that it breaks out, makes a big move, but then it really needs to digest that. So a little bit cautious on this name, lower relative strength, 80, but it does have good group strength, great composite rating, 99, incredible earnings, plus 128, 63, 189, 250, sales between plus 50 to plus 90 year over year, and after-tax profit margin now increasing by 20% year over year. Fund ownership, got pulled down a little bit in June, but now bounced right back in September, so good fund ownership there. Let's jump to the chart. Come on, 3. Yeah, so take a look. Last time it broke out, 60%, and then we consolidated for 256 trading days, so basically a full year before its next breakout. And then I tried to trade this a couple times, basically broke even, maybe made a couple dollars through a couple of these consolidated breakouts. We undercut the 50-day simple moving average, run up, then the market sours. Now we're trying to push over that 50-day, but you can see these long upper wicks. Each time we hit that 50-day, sellers step in. So until we really clear that 50-day moving average and the volume shelf, maybe a break over the high from October 7th, 107.95. I'm not too interested, but it does have a strong composite rating, strong group rating. So if we do right the ship, kind of come out of the right side of this base and break over 107.95, then I could get interested in AMD. All right, AMD. Next we have BILL. This is something that I posted on Twitter, Stock Trick Nick there today. This is looking like a really, really nice chart. Group strength A-, 40 out of 197 group based on relative strength. Within that group of 38 stocks, it's second rated on relative strength, 9th on composite rating, has a relative strength rating of 97 right now. So in a market where only a few stocks are really working, few trades are working, you want to be focusing on the strongest relative strength. So 97, good there. No earnings to talk about, still negative there. You can see after tax profit margins negative. Sales are accelerating though, 31%, 38, 45, and 86. Fund ownership on this is also increasing from 374 last September to 590 this September. Let's take a look at the chart. BILL. All right, so had this nice earnings push up, 34%, rallied a little bit after that, so 39% from the breakout point. We pulled back, started to buck the market trend. You can see price relativity compared to the NASDAQ is now in an uptrend, so showing good relative strength recently, putting in higher highs, higher lows as the market's kind of still pulling back here. So this was up 3.5% while the market was down today. Really clean pivot to work with. You have 1, 2, 3 days highs right at the same price, 283.86 so today's high, 283.86 is a possible buy point. This is one that I will be looking to buy tomorrow if we don't gap down, anything wrong with the market. But one way I would want to increase exposure is in this name right now. Because we get over the volume shelf, we're all above all the key moving averages. You have the 20 and the 8-day exponential right around the same price, providing support on the bottom. And then that stops 4% to today's low, 6.2% to the previous day's low. Gives you something to work with there depending on your risk appetite. So BILL, maybe my favorite setup going into tomorrow. OLN is another one that I'm really looking at. But Boot Barn, this is one great earnings per share, 99 rated there. Group strength C+ on the weaker end, but composite rated 99, relative strength rating 95. Fund ownership increasing. Number one stock in the group of 34 on a composite basis and 5th on a relative strength basis. And again, still has a relative strength of 95. Last earnings per share was up over 1,000% year over year. Sales were up 107%, and after-tax margin up 12.4. Let's go. Boot. This is one that's just in a very strong uptrend, respecting that 50-day simple moving average. Does like undercut it a couple days and then rallies off that. You can see this last pullback did the same thing, and now we're flagging out right through here. Not going to be perfectly drawn, but you get the point. And kind of bucked the market trend today, up 1%. So looking for a break over 95.85 as a potential buy point. This isn't a breakout stock, but it's a stock that holds such good relative strength that if the market starts to pick up, it should float to the top as well. And if it doesn't work out, it's still a stock with strong relative strength. So a stop under the low is only 3% or so there. Lower risk for the entry. CELH, Celsius Holdings. This is one that caught my eye today. Group strength. Oops, let me jump there. Group strength. Why is it doing that? Sorry. Group strength A, 26 out of 197. Within that group, it's number 1 out of 17 on relative strength, 2 on a composite basis, 98 relative strength, something to keep an eye on. Accumulation distribution, B-, a little bit lower. You would like to see that as an A, if possible, obviously. But composite rated 95, you can see nice earnings per share growth, sales, after-tax margin, doing all the right things. Fund ownership, kind of petering out at 380 the last 2 quarters, but we'll see if funds are taking some positions this quarter. Keep doing that. All right, so with this one, already had a strong move, 54% from August, but it continues to buck the market trend. So that's what I'm really keeping an eye on. You got the 20-day, the 8-day exponential moving average, and what I would like to see is if we can consolidate a little bit more. So say if the market opens down tomorrow and we do the same with Celsius, eventually breaking this downtrend line would be a possible buy point. I would just love it to see if it flagged out a little bit more and then did that on like Friday or so we could get a lower entry point, something closer to the 20-day simple moving average. Because the only thing bad about this setup right now, showing great relative strength, but your stop to the 20-day is 6%. That's a little bit wide. Let's do a couple more and then we'll get to the requested stocks. DOCN, group strength A, 25 out of 197. Within that group, it's number 4 on a relative strength basis. It's got that relative strength rating of 97. Top quarter, 23 out of 112 and on a composite rated. Just because no positive earnings just yet. Sales are increasing, but we have negative after-tax profit margin. Fund ownership has been increasing as well, 92, 187, 200. Accumulation distribution on this, A-, so that's good. Composite rated 84. DOCN. Yeah, so this is one that I wish I held. Got in on this lower pivot through here, sold like halfway through this day for nice 22% gain, but there was much more gains to be held if I held on to it. But you got to deal with what your portfolio is like at the time. This had a nice oops reversal here where we opened lower, then took out this pivot. That could have been viable on the 6th. I didn't take that trade myself. We got continuation the next day. Looked like another continuation day, but that Friday, everything kind of pulled back at the end of the day. But Monday and Tuesday, both showing good relative strength. If we can get another pullback or we open lower, taking out the high today, 86.73 is a possible buy point. One of the market leaders that if you can find a buy point in here, maybe you drill down to like the 10-day chart, use a 5-minute chart, 15-minute chart, whatever you feel comfortable with, just so you can find a consolidated area and take a 1 to 2% risk. That's 1.5% right there. Just a way to find yourself in these market leaders, because right now, only a handful of stocks are actually acting well. So if you're going to be trading, you better focus on just the very few stocks that are working out. I had one other that I wanted to talk about is SE. So this chart looks very similar to ZS, which had this nice downtrend line break today. You can see right through there, nice downtrend line where we made a lower low and then consolidated, then pushed out. So that was ZS. I'm looking at SE, very similar structure to it. You got the first pullback, that was undercut. We undercut the 50-day, shaking out a lot of traders. And now we have this downtrend line to work with. So right through there, break over today's high, 330.05 is a possible buy point. It wouldn't clear you of the volume shelf, so there might be some hidden sellers in this 2.5% area or so. But something that you might want to add to your watch list. Let's go to MarketSmith really quick to take a look at group strength A, 28 out of 197. Within that group, it's 8th strongest out of 70. 92 relative strength, 14 on a composite basis out of 70. Accumulation distribution C-, a couple of large selling volume in this pullback. So one strike against the chart, that's fine. Composite rated 69, a little bit low on that end. But this has been a monster stock. So if you can find yourself in the stock right around the 50, the 20, the 8, on a downtrend line, you can manage your risk. Something that I'll be taking a look at tomorrow with SE. All right, so let's go to the chat. Let's see Amazon, AMZN. So Amazon right now, a really weak group, D-. Within that group, it's number 1 on earnings per share, shocker there. Kind of middle of the road, 17 out of 53 on a relative strength basis, 7 out of 57 on a composite. Relative strength though, 23. When only a handful of stocks are working in the market, are we really going to be paying attention to a stock that has this weak of relative strength at the lower end of its base? Let's see. Going to a weekly chart, you can see this has just kind of been basing out. It looks like it made a move out, and then the market soured, pulled right back in, and this doesn't excite me too much. Let's go to the other chart to see if it looks any better. Yeah, so we're under the 200-day, the yellow line here, under the 50-day, under the 20, under the 8 now. The only saving grace is you have kind of like a double, maybe even triple bottom. Yeah, like a triple bottom here with a volume shelf. So you can manage your risk, I guess, against a pullback to here to see how low that goes. But Amazon's not a very fast mover. It hasn't been a market leader since September of last year, September 2020. So for a full year now, Amazon is down, let's see, down 10% for a full year on Amazon. That's why once things start to sour, you could shift focus as a trader. Focus on the strongest stocks. Amazon's not doing it for me right now. Let's see, what else? APTV. Have not heard of this stock before. Let's see, above the 200-day. We got the 20 under the 8, so not a super clean trend, but I mean, we're pushing near all-time highs, I think. Nice move. Let me jump to MarketSmith to see what this stock does really quick. APTV, auto, truck, manufacturers vehicle, components, powertrain, safety, and thermal technology solutions. Okay. So group strength right now, lower, C-. Composite rated, 80. That's okay. Relative strength, 81. Still on the low end. You see MarketSmith draws the cup for you there, which is nice to see. Let's check fund ownership on this. Fund ownership kind of petering out at the 2245 area. Strong within the group, good earnings year over year, acceleration of earnings, acceleration of sales. After-tax margin's good. So on a fundamental standpoint, this is checking the boxes that you need. Where's a good entry point though? Can you find a downtrend line? Not really. Just a break over this 2-day pivot maybe? Or do we flag out, pull back to this volume shelf? I just don't know where there's like a clean entry point on this, but yeah, I don't know if this is going to be a market leader. It is definitely bucking the trend. So up 18%. You can see relative strength compared to the NASDAQ really taking off. Tech has been hurting. So finding like other groups such as energy is good to look at. Yeah, if it pulls back to this area and you can manage your risk against the 50-day moving average, maybe a possible trade. I don't see this as like, wow, this is a perfect setup. But that doesn't mean it can't work. Just one person on the internet doesn't think it's the perfect setup. As long as you manage risk, you can be wrong many, many times and still make money trading. As long as you're making more than you're losing on your average trades. Let's take a look at MT. All right, so let's check MarketSmith actually. MT, what do you do? Steel products. Group strength, A-. Accumulation distribution, C. Composite rated 83. Relative strength on the lower end, 88. Let's see, fund ownership kind of stalled in September. Otherwise, it was increasing. Let's check the stocks in the group, because I see this is already under the 50-day simple moving average. One of my things is I don't want to buy any stocks under their 50-day or under their 200-day moving average. So we identify this is a strong group, A- group rating. It's the 43rd, steel is 43rd out of 197. So then in here, we just can check out the stocks within that group. Let's order it by relative strength, because we always want to look at the strongest stocks. MTL. This is relative strength of 99, working its way. I don't see a clean entry point there, really. It's also under $5, so I don't want to trade any stocks under 5. That's too thinly traded. CLF, still under the 50-day, but better relative strength. So when you can use, you don't have to use MarketSmith, but like when you can find a stock that you're like, okay, this is what I am looking to trade, I always like to come to the group and see, okay, are there any stocks in the group that are stronger than this that are also setting up, so I can push my money always to the strongest stocks. NUE under the 50-day. Is this group under the 50-day itself? Yeah. See, I mean, could it work? Yes, but there's a lot of selling volume down here. You can see the gap down in the group under the 50-day moving average. We might get a little bit of a pop here. It is consolidating, but then do sellers step in after they were taking a large loss and get out break even? Or the people that got in on the pullback, are they taking some profit up here? So any groups or stocks under their 50-day moving average, I'm a little bit more cautious with, especially with QQQs under their 50-day and not really trending right either. So all that to say, under the 50-day, kind of working through a volume shelf right here. Not a stock that screams this is about to break out to me, but I could be wrong, which is fine. We don't have to find every winning stock. We only have to find a couple to trade and make money. Some other stocks that I got requested was Tesla. This continues. I mean, Tesla has quietly gone up, let's see, 48% off the lows since May 19th. I feel like not many people are talking about it. Like, because it hasn't had that giant breakout day. I guess on the 24th, the 25th, or 27th, we saw some nice move. We consolidated, but we're just riding first the 50-day. We bounced there. Or I guess, yeah, the 50, the 200-day. And then we pull back to the 20. We respect that. Then we pull back to the 8. So now each time we're pulling back less and less. I mean, if Tesla can give a nice entry point, which I guess today could have been an entry point. I didn't take that trade. But a quick check back and then go. This is the largest stock that is completely bucking the market trend. So Tesla's doing something right. I also got DVAX. I wanted to check this on MarketSmith. Didn't get a chance to before the stream. It's a biotech, good daily volume, 99 relative strength, good earnings, good sales, good after-tax margin, fund ownership increasing. Okay, so let's go back here and change that. DVAX, huge breakout, 121%, but then, yeah, this is a sloppy chart all over the place. But, I mean, this tightens up really nice. Volume shelf, three or four daily highs right around the same price, 1845. That might be interesting. Break over that point, you're above a lot of the resistance. This is already a stock that had been in an uptrend before the market got a little loopy. Yeah, this is worth watching. I'm going to star that on here. Another one I got was FLL. Let's check FLL. I want to see what's in this group. Okay, so this is casinos. Yeah. What was the one that broke out today? MGM, right? Yeah. 9.6% breakout, beautiful VCP setup on huge volume. Now, can we get the same from FLL? Huge cup here, kind of put in a quick handle, bounced, now consolidating again. Good relative strength. Starting to check the boxes fundamentally after some tough quarters. Composite rated 2 out of 30 in that group. Number 1 on a relative strength basis. Let's jump back. Yeah. I don't know exactly where we would take this trade. Maybe just break over today's high. That still seems extended though. 5% from the 8-day, 16% from the 20-day. I would love for this to pull back a little bit, allow the 20-day moving average to catch up. But FLL, yeah. Good relative strength. Giant cup, just needs to put in a little bit of a handle, but already kind of made a new high, so we'll see about that. Great relative strength compared to the market. That whole group has been on fire lately. Let's see, what else do I got? CRC. Covered that on the breakout watch list. It's still kind of meandering there. Had this nice move, 66%. Pulled back first 9%, 10%. Then we undercut the lows there. So shook out all the traders. Now we bounce right back up. Get a little bit of selling at the 20-day moving average. Also the main part of the volume shelf here. So maybe a break over those 2 daily highs, 41.33, 41.40, and a move over the 20-day moving average. That could be viable as well. Something that I have alerts on, but I don't know. Doesn't seem like the top stocks in the market. So just going over the charts really quick, what I have is AEHR. Look at this. Huge move, consolidated. This is the one that I got in right through here. At AFRM, I keep on mixing these up, but AFRM moved on this day. This got out and then squatted a little bit. So then we had a wick play here where we opened in the upper wick here and then took out the high. So as it took out the high, I bought through that area, and this has been basically financing all of my risk, because before today's Upstart and AFRM trades, out of my last 10 trades, 9 of them were losing trades, all 1%, 1.5% trades, or 1.5% losses. But this one 37% trade makes up for all that and continues to finance a little bit of risk. So that's why when the market's really tricky and there's only a few stocks breaking out, I want to focus on the very best. I want to focus on using as tight of stops as possible so I can be wrong 10 times in a row and still be profitable on one trade that actually works out. So AEHR I have, AFRM, took that trade today. We'll see if we get some follow through. Shook out under the previous day's low and then a nice close. I took SOFI today. This is one where this is a kind of a newer concept to me, but huge volume coming out. We're back over the 200-day simple moving average. So I just broke bought with a break over the previous day's high, 1851. My stop is at just under the 200-day, so 4% or so there. It would be a little bit longer of a stop, but I want to see how this plays out. Don't have as much position size on this one, and then yeah, Upstart added to it this morning. I think it's my largest position, either this or AFRM, but great move today. Trimmed just a little bit at the end of the day to book some profit, but still looking good. And yeah, we already covered OLN. I'll look to add to this if we get a break over 51.30. All right, you want to see PRFT. Man, look at that. How much did this go up? 441%. Nice and orderly there. My only concern here is this looks like it's wedging higher. So what I like about, what was the chart? ZS. What I like about this chart is we pulled back, we had that reactionary bounce, right? We bounced up here, and then we took out the lows. So this kind of crushes everyone's hope, breaking the lows. Anyone who bought in here probably used that as their stop, gets stopped out. So now it refreshes the deck, and now everyone, there's just more supply that needs to come in or can come in when the stock makes the turn to move higher. With PRFT, we haven't had that real shakeout day that that cleans the deck out. So if we can get, I mean, this might be one where it's just showing great relative strength and it's continuing to buck the trend, which is fine, but which is great. Don't get me wrong. But if we could have like a shakeout in this area, pull back to the volume shelf, that would improve the trade, because right now it's just like kind of gradually moving higher. Or which way is my hand? Yeah, gradually moving higher. Not sure. Guess a break into all-time highs, but after a move like this, I would like to see a little bit more consolidation. Only a 10% pullback. Yeah, maybe it is just flexing relative strength, but this kind of wedge is something that I want to avoid for now. PRFT. All right. What other stocks do you guys want to see? I think I went through all the ones that I had and wanted to show. So we'll keep this live stream a little bit shorter, just because right now there's not too much to do. Manage the positions you're in. I'm 40% invested, but a lot of those stops are still really tight. I could be knocked down to 15% tomorrow. So I'm trying to keep an open mind, because I have a couple of stocks that are working because I'm focusing on just the very, very top. But the rest of the market, this doesn't look bullish. Thursday we pushed higher, then we squatted. Friday we closed at the low. Monday we closed at the low. Tuesday we closed at the low. So this doesn't look bullish to me. This still tells me it's time to be cautious. So I'm really trying to take those 1 to 2% losses. If a stock moves up 2%, I start to take a little bit of profit just so I can finance that risk elsewhere. Not trying to hit any home runs just yet, just trying to kind of have a foot in the market if we do get a follow-through day, which would be awesome to see. But for now, just keeping an open mind, not trying to predict where it goes. All right, we got LSPD. Yeah, this is one that was looking great, and then just flushed. 36%. So if it's not a high tight flag, where it's 90% or more in 8 weeks or less, and then pulls back within 25% of the high, if we pull back more than 25%, so like the 35% here, I am going to give this stock a lot of time to set up, especially being under the 50-day. I'm not buying anything under the 50-day moving average. But this is a lot of volume leaving. And you can see the wrong type of pattern here. So we have high volume down days, low volume up day. High volume down day, low volume up day. That's a pattern you need to reverse before you want to get in. Because this is saying institutions are leaving the stock on every time it bounces. I want institutions to be buying in. So when we saw that SOFI chart, Sophie, this type of volume is not me and you buying, unless I'm talking to an institutional trader right now, which would be cool, but this is not me putting in a buy order today. This is huge volume, institutional buying. That's what propels a stock higher, and that's what I want to focus on with, where was it? LSPD. With this, it's telling the other story. Big volume is coming out. We tried to rally to the volume shelf here, got shut down, pushed lower. So this needs to really just build out a base, kind of like Tesla did for a while before I get interested in this. All right, let's take a look. LKQ. What is LKQ? Auto parts. I mean, that's a nice pivot right through there. Number one, composite, one relative strengths, good group. Earnings per share accelerating, 23, 28, 65, 113. Sales pushing in the right direction now, went from -3, -2 to +6, +31. After-tax profit margin increasing. Fund ownership on this increasing as well. No, not the flag. Let's do some measuring here. 11%, 6%, 5%, 7%, and we're right through there. So, I mean, yeah, break you have your entry point. That's nice and defined there, right? Break over that. The problem is that going to get sold off if the market's not right? Probably. Only 4% down. Yeah, this chart, I mean, it's consolidating nicely. It's right near a buy point. So if you can manage your risk, that's fine. Under the 50 days, only 3.8%. So it's not going to be a super fast moving stock either way, but decent setup, decent group, and also improving their earnings. So that's good to see. All right, off-topic question. Nick, have you ever gone to the Minervini Master Trading Program? I have not. I look for anything that Mark puts out. So watched his interviews on YouTube with Richard, and he just did one with MarketSmith the other day. Took a bunch of notes on that. I'm not going to be able to go this year. It is something that I definitely want to attend in the future. Just wasn't in the cards for this year. But yeah, Mark Minervini, if you don't follow him on Twitter, right now he's leading the U.S. Investing Championship in the, what's it called, the Institutions Division or something like that, for people with accounts $1 million or more. He's returned like 270% this year. His trading books are by far my favorite trading books I've read. So huge respect for him. He's changed my trading a ton, and I definitely want to make it to one of his programs before, but not going to be able to make it this year. SPSC. This is interesting. 73% up, pull it back 8%. What does this guy do? SPSC. Computer software. Lower daily volume, so just keep that in mind. Average 225,000 shares. A+ group strength rating, A+ accumulation, 98 composite rating, 95 relative strength. Fund ownership has been steady around 513 the last 3 quarters. That's kind of interesting. Yeah, man. Top of the group though in almost everything. Good earnings per share, just kind of steady growth. Sales, after-tax margin. Yeah, so this is, let me write this down, SPSC. Good call out. Right at the volume shelf here. It's just lower volume. So there's a chance you get like gap down, or the difference between the bid-ask prices, the bid-ask spread might be a little bit large for you to put any real size on, especially in kind of the choppy market we're in. But I mean, showing great relative strength. This looks good. If we could get a couple days where the 20-day and the 8 actually like touch, that would be perfect. Otherwise, this is a really nice looking chart. 2% under. Yeah, I'm going to add this to my watch list for tomorrow. Thanks for calling this out. Julio, thank you. All right, MFA. What does this guy do? Yeah, I don't trade REITs, REITs. Decent group right now, but accumulation distribution D+. I mean, this probably has a large dividend. Where do I see that on here? I think I need to go to the weekly chart. I'll look for it later. Yeah, so MFA, this isn't a chart that like excites me at all. I don't know. I don't want to be trading REITs. Sorry, I don't want to say like anything bad about it. It's just not something that I would trade. So I'm gonna take it away there. KBR. All right. Whoops. KBR. Yeah. Okay. Nice cup. We're above all the moving averages. You got the 200-day, the 50-28 all in the right order, above the volume shelf. Putting in a little bit of a handle here. If this can pull down to the 8-day, allow that 20-day to catch up, and then we get a nice entry point down there, that would be awesome. let's check the trading stats on this, KBA. Because I don't know what this does. Exchange trade funds. Ooh, I don't want too much China exposure. I definitely don't feel comfortable holding too much there right now. But, I mean, to each his own. You know the risk trading China-related stocks. All right, let's see. Did I have any other? BTU, this is one that I didn't say. So, very loopy chart. I have alerts set. I don't think I'll trade it, but pull back 37% high to low, pull back 16%. We squatted today 11%. So we're starting a very loose and kind of quick VCP, volatility contraction pattern. You see volume on the down days are less than the breakout days, which is the right kind of sign. Look great going over this kind of like 3-day pivot. Here, let me take away that one. Moving over this 3-day pivot yesterday, but since then we squatted again. So now we can kind of use the same pivot point. If we break over that potential buy point there, gets you right at the main part of the volume shelf, and a move to the highs would be 17%. So this is an energy stock. So that's been a very strong group recently. So maybe something to keep an eye on. I have an alert set right at that pivot point to see if buyers step in after this kind of malfunction bar. I did cover Bill, but I'll do it really quick for you since you had such a good SPSC chart. This is, I think, my number one watch for tomorrow. Had that nice earnings pop, 35%, drifted a little bit higher to 40%. Then we went through some consolidation with the market, started bucking the trend, putting in higher lows while the market pulled back even further. And now we have like a nice pivot, 1, 2, 3 days, right around the same high. So a break over today's high, 283.86 is a potential buy point. Gets you over the volume shelf. You're over the 8, the 20, the 50, 200, all of that. And you have the 8 and 20-day moving average right at the same price. So you can put your stop under that. That's 5% or so. You can manage risk there. So BILL, probably my number one going into tomorrow. We'll give the chat 10 seconds. Put in a chart that you want me to go over. Otherwise, I'll wrap it up here. 10, 9, 8, 7, 6. I know we're on a delay, so this isn't quite fair for you guys. But yeah, if you guys do have any other charts that you want me to go over, just leave them in the comment section of the video. I'll get to any charts that you guys have there. Otherwise, follow me on Stock Twits. It's Stock Tricks with Nick there. On Twitter, it's Stock Trick Nick because they have the character limit. So Stock Trick Nick there. And if you enjoyed the stream, leave a like. That helps YouTube send this out to other people. And then subscribe to the channel. I make this live stream on Tuesday nights, Breakout Watchlist on Sunday morning going into the week, and other trading and finance content. We got one other chart, LC. This is a good call. Market leader. I just didn't see, I don't see a super clean entry point. I guess a break over yesterday's high. Whoops, I'm not even sharing. There we go. Here's LC. Maybe a break over yesterday's high, 31.78 is a potential buy point. There we are a bit extended, 6.1% from the 8-day, but you can always manage risk on an intraday chart. Keep those stops 1%, 2%, take a lot of different trades, and still be profitable if you find one big winner there, as long as you're keeping your stops pretty tight. This is a name that I definitely want to find a way in, so if we break over that point, maybe I'll be joining you on the trade. We'll see how volume shakes out on that move too. But LC, great stock, something that overall you want to keep an eye on.